Today's topic, cash flow statement.
What is cash flow statement?
A cash flow statement is a financial report that provides a detailed summary of the cash inflows and outflows of a business over a specific period, usually a quarter or year. It helps investors, creditors, and management understand how a company generates and uses cash, ensuring liquidity and financial stability. Three main sections of a cash flow statement. 1. Cash from operating activities. 2. Cash from investing activities. 3. Cash from financing activities.
What is cash from operating activities?
So, the concept of cash flow from operating activities is quite similar to that of operating income. The goal is to measure the cash flow that is the result of activities directly related to normal business operations, that is, things that will likely be repeated year after year. Common items that are categorized as cash flow from operating activities include 1. Receipts from the sale of goods or services. 2. Payments made to suppliers. 3. Payments made to employees. And 4. Tax payments.
What is cash flow from investing activities?
Cash flow from investing activities includes cash spent on or received from investments in financial securities, like stocks, bonds, etc., as well as cash spent on or received from capital assets, that is, assets expected to last longer than 1 year. Typical items in this category include 1. Purchase or sale of property, plant, or equipment. 2. Purchase or sale of stocks or bonds. And 3. Interest or dividends received from investments.
What is cash flow from financing activities?
Cash flow from financing activities includes cash inflows and outflows relating to transactions with the company's owners and creditors. Common items that would fall in this category include 1. Dividends paid to shareholders. 2. Cash flow related to taking out or paying back a loan. And 3. Cash received from investors when new shares of stock are issued. Let's have a look at a sample cash flow statement. Suppose the business received $320,000 cash from customer, paid some bills to suppliers totaling $50,000, along with that, paid salaries to employees of $40,000 and, finally paid the income tax amounting $55,000, so it will deduct all the expenses from the cash received for that specific period. The total net cash flow from operating activities will be $175,000. In the investing activities, the business purchased an equipment for a total of $210,000. Now finally, in the financing activities, the business paid a total of $25,000 dividend to the shareholders. And also sell some of the shares. From the new shares, the business generated a total of $250,000. So finally, after the sum of all three activities, the business cash increased by a total of $190,000 for that period.